two trades, and both of them were bangers. Very simple. Like I said, very, very simple. Every single time I take trades, it's very simple, straightforward to the point. So if you are somebody trading options, I'm going to show you guys how to go about trading it as simple as possible. So let's get into it. All right. So as you can tell, the first thing that I'm looking for when it comes to trading in the stock market is looking for what direction the market is going in. So understanding market structure. Okay. So in this case, if I'm looking at this and I know that the first thing I'm looking for is market structure, hopefully I spelled that right. Let's see. Fuck it. If I know the first thing that I'm looking for is a market structure, then I have to identify what direction the market is going in. So at this point, I'm looking at this and I see that we are obviously bearish. We're dropping, right? We came up and then we dropped. So at this point, I know that the market is obviously bearish, right? But what did we do right here? Look, as you can see right here, we had a change of character. And even though it was a little bit of a wick, I still count that as a change of character because from my experience, I've seen where we have a small wick and then we end up just shifting structure, right? We end up having a market structure shift. So that's why I count these as well. I don't count them out. Now, obviously, I'm a little bit less. I'm not going to hold for too long when it comes to these just because I know that it could be just a little wick and it could be a little liquidity grab. So I'm just very quick. I'm just quick with it. Okay. Like I'm not going to hold for too long. I'll give you an example of which ones you can actually hold for too long. Well, hold for a little longer. But yeah, so this right here would obviously be a change of character. So right here, I would put, or we can put market structure shift, right? So this is a market structure shift. So we were bearish, right? But now we are bullish because as you can tell, we had that shift right here. So this is the last high, this was the last low, but then we broke right there. So now we are doing something like this to look to make that new higher high, which I think we did right here. So that's exactly what we're doing. So it's a new structure, right? New structure shift. Okay, so at this point, I saw this and I saw that we were shifting structure. So I knew that, okay, since we're shifting structure, that means that the market structure is now bullish, no longer bearish. So that would only be smart for me to look for what? Supply and demand zone, because my next thing is supply and demand zones. After I've identified the structure, I want to look and identify what zone I can enter off of, right? Now, in this case, it would be a demand zone because the market is bullish. So I want to enter off, I want to enter calls since the market is bullish. So I would look for a demand zone. But first, I need to look for a valid demand zone. And the valid demand zone is going to be this one right here because this was the candlestick that caused this whole move and caused this to break structure. And this was the candlestick before that impulse move up. This is where buyers are at. So once you see a demand zone, you know that there are buyers in this area. So right here, we know that there are buyers in this area. So since there's buyers, we know if it comes back into here, there's a high likelihood that it's going to tap in and then just start buying again, right? So now we have a valid demand zone. And for the valid demand zones, I'm looking for them on the 5 and the 15 minute. I'm not looking at it on the 1 minute because there are too many demand zones on the 1 minute for me to actually make a good assessment, like a valid assessment on a valid zone. Because like there'll be like five or not five, there'll be like three demand zones on a 1 minute, and it'll be so hard for me to pick which one is the one that's gonna reject, right? So we'll put demand, and we can put 5 minute because it was on the 5 minute. So 5 minute. Okay, and now it's just the entry. Now this is the last step. The entry model is the last step. And I've already went over the entry models that I use on another video, so you can go watch that one. It's on my channel, but this is gonna be we're gonna look for an entry model right here. So since we tapped in right here, it's a very big zone. It's a very, 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 very big zone. So in this case, I wouldn't really want to enter off of like a risk entry because it's a very big zone. So that's off the table. I could have waited for a confirmation entry right here, and I could have taken something like this and, got out right here, which would have been a very good trade. And this would have worked as well. But this would have been an example of a candle close entry. So right there, boom. And that would have been a candle close entry because I waited for the candlestick to close. But in this case, I didn't use that. I used a confirmation entry. So what I did was I just waited for a valid demand zone to show itself or to appear on the 1 minute and then enter off of that one. Now, the reason why I'm entering off of a demand zone on the 1 minute is to get a better confirmation, right? To get a more of a precise entry. Because if I just enter right off the rip, this is a huge entry. So if I enter off of a, but I meant, but if I enter off of a 1 minute, then it's more of a precise entry. So that's exactly what I did. So as you can see right here, once we tapped into here, we broke a little bit. I was just waiting because this one was gave me a good close, but this one didn't, and then this one gave me a good close as well. So I got in both right before it closed, and then I took this and I got out right around here, which was a pretty decent. Was a pretty decent trade. And like I'm saying, for me, it's not about catching the whole trade. It's just about catching something, right? Catching something is good as well. And then as you can see, obviously we tapped into here as well, another demand zone. Now I didn't enter off of this one because I just really wasn't paying attention to it. I saw it and I marked it down, but I just really wasn't paying attention to it. But this is the first trade that I took, and like I said, the entry model that I used was a rejection entry. So I just waited for the candlestick to give me a good rejection, and then I took an entry. So for the last thing right here, I would put an entry. What was it? A uh, reject entry. So the rejection entry. So that was the three-step criteria that I used, and as you can see, they all checked out. So then that's why this is a valid trade, and that's why this worked. Now, of course, there's going to be times where it doesn't work, but in this case, this one actually did end up working. So I fuck with it. Okay, I fuck with it, and it fucked with me. So that's an example of me following my rules. Okay, so that was a very good trade, and I broke it down. But let's go over the next one, and let's see how this one does. Okay, so this is the next one. Now this is AMD. Okay, now it's so obvious. It's so obvious. We're bearish as fuck. Like as you can see, low, high, low, high, low, high, low. So it's pretty obvious that we are bearish, right? So number one, market structure, we already know it's bearish. So market structure, we know it's bearish, right? Okay, now we're looking for a supply zone. Where is that supply zone at? Where is that supply zone at? Right here. Candlestick before impulse move, causing that what? Break of structure. So this is going to be a supply zone. So now we have for the S&D, we have a supply zone, which aligns with the bearish structure. So now next, all we're waiting is for price to tap into that supply zone and then execute using one of our entry models. Okay. So like I said, if you want to know the entry models, it's on my other videos, so you can go watch that. But as you can see right here, this is the entry model right here. Boom. As you can see, we tap in, and like I said, on this one, this is a candle close entry model. Okay. Candle close entry model. I waited for the candlestick to close. I didn't enter off of this one. I entered off of this one because I saw that this one price started to slow down, right? First of all, we're bearish, right? That's number one. Number two is price started to slow down once it tapped into that zone. So that's a green flag. That's a green flag because you can tell that we're very, very bullish, very, 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 very bullish. But then once we tap into this zone, what happens? We start slowing down a little bit. We start slowing down. So that right there is already a good sign for me that this shit wants to drop. Now I don't know how far or how deep it wants to drop, but I know it wants to drop even a little bit, right? Like I said, my goal is not to catch a crazy move. It's just to catch something consistently, right? So or catch a good move consistently. So as you can see, that's when I just was like, okay, let me get in. And then as you can tell, it obviously started dropping. My target was this right here. As you can see, this right here. And yeah, I mean that was pretty much it. And like I said, the three-step criteria that I used was effective, right? The entry model was a candle close entry. So candle close entry. So I mean, yeah, like I said, it's very simple. It's very, very simple, especially when you master these and you start seeing them everywhere. The only thing that's gonna fuck you up, if I'm keeping it 100% real and 100% honest with you, it's probably gonna be breaking your rules because a lot of the times you're gonna force zones, you're gonna force entries that aren't there. Especially if you're just waiting on the charts and looking. A lot of the times you could like actually force shit, and that could fuck you up, right? But for me, I know if none of these are checked off, or if one of these, at least one of these aren't checked off, then I fucked up and I didn't follow my rules. So if I take a trade and it all of these align and I don't take the trade, then that means I'm just bitching out and I pussied out, right? But if all of these appear and then I take the trade and then I take a loss, then I know that it wasn't that I broke my rules. It was just like the strategy just didn't work. And that's just how it is sometimes. That's just how it is. Strategy is not going to work all the time, right? It's not 100% proven win rate. But for me, this is the simplest strategy for me to understand and easiest one for me to execute. There's a lot of people out there who have different strategies, different entry models, etc., etc. But for me, it's very simple like this, and this is what I've seen that's the most consistent, most effective for me, and easiest for me to take a trade because I'm only looking for three things. And market structure is pretty simple to identify. Valid supply and demand zones are simple to identify. Now, the only thing that's I guess a little bit tricky is going to be the entry model. But if you know the entry models, if you practice them, if you back test them, even if you paper trade them, then you're going to start to see patterns. You're going to start to get experience, and you're going to start to do good with these entry models. So I mean, that's pretty much it. That's the premise of it. That's really the premise of it. And I mean, there's nothing really more to say. But yeah, that's how I took these two trades today. It's very simple. And like I said, I go over my strategy almost every video because I want you guys to see how simple it is. It's not so difficult to the point where you have to take 5 hour course to really understand it. Obviously, like if you're a novice, like straight novice, never been on the charts, it's probably gonna take a little longer for you to understand it. But if you're like somebody who's intermediate, has been trading already, but just can't find a good strategy that suits them, if you start working on this exactly like from what I told you, obviously maybe a little bit more of an explanation, but just from what I told you, you can start spotting zones, you can start spotting areas, and you can start hitting. I'm not even gonna lie, but the only thing that's gonna fuck you up is your mental. Probably your mental's probably gonna fuck you up. Um, and obviously, there's going to be times where you take trades and they don't play out, but not because the strategy is trash, but because that's just how trading is, right? So, other than that, that is basically it. Very good trading day today. Very good trading day all the time. And now another thing, because on my other videos, I said this, and here's the thing about like uh, trading every single day and learning every single day. You start to change your perspective on things and change your mind on certain things that you thought about in the past. So before I said only stick to trading one stock, right? Because it makes everything more simple and et cetera, right? But the real truth, in my opinion, is there are so many opportunities out there that only trading one stock is like ass. You know what I mean? Because like, and it is good, but like today there was an opportunity on the video, right? Let's go right here. NVIDIA. There was an opportunity on NVIDIA, right? Very good, very simple opportunity on NVIDIA. It was right here. And very good, very good. And imagine if I didn't take it. Obviously, I would have taken AMD and that would have been good. But imagine if I didn't take this. Why wouldn't I take it? Like, I wouldn't say you're missing out on profits, but you're missing out on good setups that you can take that can help you and also give you experience with this strategy, right? Because let's say you obviously you trade 5 days out of the week. Let's say you take one trade out of all those 5 days, and let's say you only take one trade, and let's say you only trade one stock. Let's say out of those 5 days, you only get like two good setups on that stock. Cool. But if you look at AMD, Nvidia, and on all these other stocks, then you could get good setups on those 3 days that you didn't trade. On Tuesday, Wednesday, Thursday, you could get good setups. And it's also not about forcing it. It's just about getting those good setups, executing when you see them, and gaining that experience. So that's really what I would say. And I kind of changed my mind on that because I started looking at these other stocks when I was not trading AMD, and I seen a lot of good setups play out. A lot of good setups play out. Now, obviously, I didn't just go off the rip and just, oh, let's start trading, let's start trading. No, I obviously looked at it and I said, okay, let's just act like I took the trade, but not really take it, and let's see if it would have worked out. And then it started working out, and I was like, okay, this has potential. So then I started taking trades, small bits of trades, and I started taking the video trades. I started taking trades on SPY, just small, nothing major. And then I just started seeing that build up. So that's just how it is. But other than that, that is basically the trading day for today. Like I said, it was pretty simple, pretty straightforward, pretty good, and yeah. So that's all I gotta say.